Welcome back. You're still tuned into Halftime Report on CNBC TV18. Let's talk about one particular company, Jupiter Lifeline Hospitals. It's a recent listing. It's on our radar now. Their occupancies for 9 months have risen to 63% versus 60%, and the margins have also expanded. For them, debt repayment has resulted in an annual savings of around 40 crores in terms of finance costs. To talk about the quarter gone by and the outlook going forward, Ankit Thakker, who's the CEO of Jupiter Lifeline Hospitals, joins in now. Ankit, hi, welcome to the show. Well, let's start by, discussing exactly the ARPOPs, or the average revenue per occupied bed, which has risen around 5% this quarter on a year-on-year basis for you all. While it has risen, it's not risen as much as what the other hospitals have shown, maybe up to around a 10 to even 15% growth. Is that the model simply because you're in micro cities and hence the amount that you can probably scale up in terms of ARPOPs is limited? And what might your guidance be also?
Hi, Ekta. Thanks for having me here. So, on the ARPOP front, yes, it has risen. We currently run 3 hospitals, Thane and Pune. Both of them, in my view, are at reasonable ARPOPs. And going forward, I don't think we have, very aggressive ARPOP hike ambitions. We believe that they should rise in line with price hikes and inflations over the coming years. Indore, of course, besides the inflationary trends, also has a little bit of stabilizing to achieve and a little bit of optimization in terms of case mixes. So in Indore, we might see slightly higher ARPOP increase going forward.
Right. I'm looking at your occupancies here, and Pune 62%, Thane, of course, mature hospital 72%. Indore is the up-and-coming facility, which is increased around 51%. What's the occupancy trajectory of the Indore facility going forward? And on a blended basis, what can the occupancy for the company be?
So on a blended basis, I mean, each hospital is designed to be in mid-70% odd occupancies. Indore just has completed tie-ups with insurance companies, and that is one of the reasons why we are also seeing slightly better occupancy trends in the recent months. In the next year, sometime when we believe that the occupancy will touch and cross the 60% mark, we will look at adding new beds in Indore. Currently, we are running close to 250 beds, and we have an opportunity to add another approximately 200 odd beds in Indore. So once we cross this 60% occupancy mark, we will add new beds, and that will contribute to better occupancy numbers there as well.
Okay, all right. So you'll probably add new beds once you hit occupancies of around 60% at Indore. What I also noticed is that your payer mix is increasing. It's, the insurance component has risen, and that's also helped your Indore operations. How much has it risen, and how much do you expect it to rise? And what is changing on the ground when it comes to more insurance payments?
So we have always had a higher insurance as a part of our case mix. Both the matured hospitals of Thane and Pune have as much as 2/3 of the patients, using insurance to pay for their healthcare. Indore being new and relatively lesser insurance penetration had a dilutive effect on the overall numbers. But even in Indore, after the empanelment and in recent months, we are seeing increasing insurance adoption trends. So I think even Indore in the coming years should see a rise in insurance segment in our hospital. And overall, as an industry, I think insurance as a payer is only going to increase.
Okay. Just a quick question with regards to the cash on books. How much is it now post the IPO? Because you did have some amount of debt repayment. And how are you using it? How much of it is probably going into the Dombivli CapEx? And how much is probably going in to upgrade your current infrastructure within hospitals? The reason I ask is that, one of the hospitals which is publicly listed spent around 30-40 crores in terms of getting robotics on board. Is that something that you all would probably be looking at as well?
Sure. So we have currently something like 300-350 odd crores on our books. in cash. We will use it in a combination of ways. Definitely, Dombivli capex is already undertaken. It should be ready in the next 2 years. So this cash, along with internal accruals that we will generate, will definitely fund Dombivli. We are also looking to add a couple of more hospitals. So we are looking for land currently or any other opportunities that may come. So that is another plan. And finally, coming to your upgrade question, yes, at some point in the life cycle of hospitals, the biomedical assets do need change and upgrades. So that happens as a cyclical process. Robotics is also under the evaluation, though today I don't have any firm things to tell you about. But all technology we keep evaluating from time to time, and whenever appropriate, we invest in.
All right. Thank you so much for joining in and giving us all those details for your growth plans going forward. Looking forward to the occupancies increasing and the numbers improving, and the expansions that you're looking at as well. On that note, we'll take a short break, come back, get you more on the markets and a lot of stocks which are actually buzzing around right now as we speak. We'll discuss more of them in detail.